SABMiller, of course, is in the business of beer manufacture in Europe, in Latin America and in Africa, and in the United States of America. It's in the process of being acquired by AB Inbev, and in the lead into that transaction, it has done various conditional side deals with other beer brewers in those regions in order to offload certain of its businesses, because that's what's required to get regulatory approval for the big deal. So the international beers, of course, are things like Peroni. They've got Miller, Genuine Draft, that's over in the US, but that will also go. And Grolsch, which will be another one which gets the boot. Snow in China will be gone. What will be retained, of course, is Castle and related brands here in Africa, and then some of the others like Bavaria and so on that operate in Latin America. And the market capitalization is 1.4 trillion rands, PE ratio of 32.74, dividend yield of 1.81%. But as Chris and I were discussing earlier, it's kind of like all that's happened now, people are waiting for the transaction, and all these regulatory hurdles, as they're overcome, it gets closer and closer.
Yes.
And then it's the time value of money and so on.
Exactly. So we're really not talking about the intrinsic merits of the company anymore. That's really a dead
And as you can see, from a 32 PE, you're getting a good price relative to your historic earnings. It's a very good buyout price. Let's look at the chart, though, because you can see that that's where it bounces in the middle of 2015, late last year, where the deal got tabled, and now it's edging along, although there is a bit of a rand issue. So it's 44 pounds converted into rands, which is what people are going to get. So if the rand weakens to the pound or strengthens to the pound, that causes a little bit of movement. So
really this is very much a play on what your perception is going to be of the rand-pound exchange rate. And there's a couple of things here. There's a growing perception in the UK that Britain is going to go for an exit from the EU in the referendum on the 23rd of June. Now if that happens, the pound could weaken considerably, and it's shown some weakness already. On the other hand, of course, we're debating whether we're going to getting a ratings downgrade over the next few weeks, and maybe in early June from S&P. So if that happens, the rand could depreciate. So it's a tricky one, trying to work out the dynamics of what happens with these two currencies.
Well, look, as far as I'm concerned, having been contemplated, that sort of nonsense was just to sell the SABMillers, because you're going to get a capital gain when you get bought out compulsorily anyway, and take the proceeds and use the money to buy AB Inbev, which is what we did in the portfolio when AB Inbev listed. Because at some point then you own the AB Inbevs, and then you'll get the SABMillers along the way, and then you can feel like you've done your duty. So that is an option for people if they own SABMiller now and they don't fancy the Brexit risk and or any other currency related problems. They could do the trade and get it locked in.
That makes a lot of sense, Paul, because it takes the uncertainty out of the equation.
Just a quick question. There's no chance that the receiver of revenue is going to announce some special deal that if you sold and then you used the money to buy the AB Inbevs, that you can get some deferred capital gain type thing?
I'm not aware of it.
Because I remember once, like years ago, when Walmart bought into Massmart, they said that if you took the proceeds of your half buyout and bought the shares back within a period, you could roll over the capital gain.
I suspect, because there is another offer in the wings, the lower offer that we talked about, unless you go for that offer, I think you might well find yourself on the wrong side of SARS there.
So no, we don't know, but that seems intuitively correct. Okay, so as far as SABMiller is concerned, given those uncertainties, what are we going to say? Not hot right now?
No, not
much in it. Okay, there you go.